Hi, I'm Patu from freefincal. Let's take a look at three aggressive hybrid funds which have displayed an excellent track record with the CRISIL hybrid 3565 aggressive index. They've also done well with the Nifty 100 total returns index. Now, I had released the April equity outperformance screener. In that, I have added the CRISIL hybrid index, which I just talked about. And I'm going to show you some of the results of that. You can get the full list of all equity fund performance as well as aggressive hybrid funds in that screener. The screener is rupees 111 for the April 2020 version. I will leave a link below for that. So this CRISIL hybrid 3565 is more or less the category benchmark. Most mutual funds use this. This has got 65% of BSE 200 total returns index, and the rest is the CRISIL composite bond fund. The CRISIL composite bond fund in of itself is a composite index. It's got several different types of guilds, AAA bonds, and so on. And it's got an average maturity of about 7.19 years, which means that it is a fairly long-term bond index. Now, I had looked at 33 aggressive hybrid funds in the category, and out of that, 3 qualified for the criterion that I had set. So, the criterion I had set is essentially that I will look at every possible 1 year, 2 year, 3 year, 4 year, and 5 year returns between January 2013 and April 2020. And for example, if I choose, let's say, if 1 year return, and if there are 100 1 year return data points, the fund should have outperformed the index for 70 or more of those 100 data points. That's called a 70% or more return outperformance consistency. And we also look at what is known as downside protection. Whenever the index fell down, the fund should have typically fallen down lesser than the index, and the downside protection consistency should also be greater than 70%. That is for 100 1 year durations as an example, the fund should have fallen lower than the index on 70 or more occasions. That's the downside protection consistency. So we are looking at aggressive hybrid funds that have a return outperformance consistency of 70% or more for 1 year and 2 year and 3 year and 4 year and 5 year, and a downside protection consistency of 70% or more for 1 year and 2 year and 3 year and 4 year and 5 years. So it's several and operations. These all these basically these 10 conditions, 5 return conditions, 5 downside protection conditions, all of them are satisfied only for 3 mutual funds. Those are HDFC Children's Gift Fund Investment Plan, ICICI Prudential Equity and Debt Fund, and HDFC Hybrid Equity Fund, or what was previously known as HDFC Balanced Fund. Now, this does not mean all other funds are bad. They may have a return performance just close to 70%. Don't ask me what about this fund, what about that fund. If you want to know the status of your fund, get the mutual fund screener, then you will know. So that's what I wanted to say. If you are invested in this fund, you can continue investing as long as you are investing with the right plan. And if you are considering to add an aggressive hybrid fund as the core part of your portfolio, then you can consider using these funds, at least the ICICI Prudential and the HDFC Hybrid Equity Fund. The HDFC Children's Fund has got some kind of conditions on lock-in or something, I forgot. At least the ICICI Fund and the HDFC Hybrid, new investors can use. So that's what I wanted to say in this video. Like I mentioned yesterday, the 1,000 rupees off offer on my lectures on goal-based management, it's extended until May 3rd, until the lock-in. So you can buy that. I will leave the link also in the first comment. Bye-bye.